What's going on, guys? I hope you're having a good day. I've got another video that I'm going to do something different where I'm actually going to show you a tool that you can use. Considering we just talked about car loans and credit cards and how important it is to make sure that you're using those responsibly, I want to show you how to use a loan calculator, okay? It's a great tool to use if you already have debt, if you're thinking about buying something or getting a loan here soon. It's good to use this tool to predict what monthly payment can you afford. Okay, if I have a certain interest rate, how is that going to affect the total amount of interest that I pay over the long run? How fast can I pay off a loan? So I hope it helps you out, and enjoy the video. Alright guys, so I've got this website pulled up here. You can see the address here in the upper left hand corner, and pretty much this is just a loan calculator. This is what I was talking about. So today the first part of what we're going to go over is, let's pretend you're buying a car, right? Let's find out just how important some of these big determining factors are, such as the amount that you finance, the interest rate, and how long of a term that you finance it for. So let's start off with a few things, right? Let's start off first with the power of interest rate. Okay, so let's pretend that you're buying a car for the first time and you want to spend about $10,000. Okay, so what I want to look at is show you the difference between already having your credit score built up really high and getting a good interest rate versus maybe not having a score and getting a mediocre rate, then maybe having a bad interest rate because you have negative credit. And then lastly, like, you get the loan from the wrong place, you've got bad credit, and I mean, they just offer you a brutal interest rate. And unfortunately, that does happen. So let's just take a look, and we're going to kind of keep it simple here. So let's assume that someone wants a $10,000 car loan. All right. They want to pay this off in 60 months, which is 5 years. That's kind of standard for new cars. And let's say they've done their job and they've got a good credit score. Okay, so they'll get 1.9%. So let's see what their monthly payment is, how much interest they're going to pay in the long run, and what that brings your monthly payment to and the total amount that you pay. So, all right, it says you have got a monthly payment of $174.84. Okay, you are going to pay a total interest of $490.43, which brings you to a total loan amount after 5 years of $10,490.43. Not too bad, all right? That's pretty darn good, considering that you're paying a bank 5 years worth of loan payments and you're only going to end up paying them $490. Not too bad. Okay, well, what about if they don't have good credit, right? Let's say they just don't have any credit at all. They start off in the beginning, C tier, which is about 6.85%. And let's see what happens there. Okay, that definitely jumps it up, obviously. That's going to be a monthly payment of $197, a total interest of $1838.30, bring your total loan amount to $11,838. Okay, that's a pretty big difference right there. Heck, just look at this number, the total interest paid. Considering the last one was about $490, okay, this is about a $1,400 difference just from having really good credit to just having no credit. Okay, so we're already beginning to see how important it is. Unfortunately, let's take those next two steps and find out what happens if you've got bad credit. Okay, so let's jump that, and we're going to go to, let's say, 11%. Okay, we're definitely getting in the high interest rates, especially for car loans. All right. Okay, our monthly payment has jumped up to $217. All right, keep in mind we started out at $174, and maybe that doesn't seem like a big jump to you, but to me it definitely is. And it's, now look at where we're at for the total interest paid. We're at $3,045.45. All right, now we're paying about $2,500 more than if we had good credit. So really, guys, have a good credit score. Now this last one, I'm not going to lie to you, this doesn't happen very often, but like I said, I do work at a financial institution, and I've seen all sorts of loans. And so when I say that I have seen someone pay 18% on a car loan, it means that I have seen someone pay 18% on a car loan, and it just drives me up the wall. I'm gobsmacked when I find out about this, but let's just see what happens. $253.93 for your monthly payment. All right, and we started at $174. Okay, so we're over $70 more a month. Actually, I take that back. That's not right. But that's quite a jump from where we were at in the beginning. Uh, Total interest, $5,236. I mean, that's insane. We started at about 500 there. So this loan, all right, everyone's getting a $10,000 car loan. But just because the interest rate's changing, this loan is really, for this person, a $15,236 car loan. All right, guys, I don't want anyone to ever have to pay that interest rate. So I hope this kind of illustrates why you need to build up a very strong credit score. Okay, and if you don't know about that, I've got videos over that. If you're finding out what interest rates are good, that's all part of my car loan video. So check those out. But this is the first part. I just wanted to talk about how your interest rate impacts your loans. It is very, very important. Okay, the next thing I want to talk about is the amount that you finance. Okay, let's say someone wants to buy a car, same exact scenario, and they don't have a credit score. Okay, so let's go back to that 6.85%. This one isn't going to have nearly as many steps, but it's still pretty important to demonstrate. And let's say they want a $15,000 car. Okay, so they're going to buy this. They're not going to put anything down. They don't really have any down payment money. They pretty much just want a loan for everything from the bank. All right, and they don't have any credit. So let's see what their monthly payment would be. All right, so we've got $295.96, and we've got a total loan amount of a total interest of $2,757, and a total loan amount of $17,757.45. All right. Now, while that's not nearly as bad as some of the rates that we saw last time, still $2,700 in interest. That's not good. So what if this person would have said, you know what? I've been working a job, or maybe they want to work a job and start saving up some money before they buy this car and put a healthy amount down. Okay, that's very, very important, because it's going to, obviously, you'll see, in a second, you're going to see that it's going to lower your monthly payment. It's going to lower the total interest that you pay. It'll also help you get approved with the bank that you're applying for, because it shows that you are willing to be responsible and put money down. You say, you know what, bank, I understand that you're going to lend me a certain amount of money. Let me go ahead and put some skin in the game as well. So let's say this person puts down $5,000, all right? And so they only finance $10,000, all right? So we're going from $295 a month and $2,700 in interest to $197 and $1,838 in interest. Now, to me, that's a big deal, considering that essentially he's giving up $5,000 to save himself $700, $800 in total interest later. I mean, why not save yourself that money? All right, why throw away that extra money in interest if you don't have to? It's going to make your monthly payment more affordable. It's going to save you money in the long run, and it helps you get approved for a loan. So having a down payment is really, really important to that car process, and I would encourage each and every one of you guys to have at least 10 to 20% to put down on a vehicle. Okay? Now, the last thing I want to talk about is term length. Okay, this is also very, very important, because it's going to have an impact on how much total interest that you pay. So let's kind of keep these numbers the same, right? We were playing around with $15,000, so let's keep that loan amount the same. $15,000 for a purchase price of the car. And let's say someone says, you know what, I want to take 3 years to pay this off. Maybe they can afford a higher monthly payment. Maybe they're living at home and they say, you know what, when my bills are not super high, I can afford to throw a little bit extra at my car each month and get this paid off fast, because I know it's going to save me money and interest, right? So let's say they pay it off in 3 years, which is 36 months. Their monthly payment is $462.13 and a total interest of $1,636. Okay? Again, I'd much rather have 1.9% and all that, but at the same time, it's good to pay off a loan faster, because you're going to pay less interest. All right? Now, let's say someone in the same exact scenario says, you know what, I'm living it at home. I'm going to live a good life right now. I ain't got no bills. I don't have anything to worry about. I want a low monthly payment, right? I want more going out money. So you know what? Let's just stretch this loan out as long as we can. All right. Let's take twice the amount of time. Let's take 6 years to pay it off. All right. What would that do? That's gonna drop your payment down to $254.66 66 cents, but it's going to bring your total interest paid to $3,335. Okay? Is that worth it? Just to have a lower monthly payment, is it worth a couple, a little over $1,000 extra? All right, that's a judgment call that you're gonna have to make, but at the end of the day, I don't think that's worth it. All right, so the amount of time that you take to pay off a car loan, or really any loan for this matter, guys. I know I'm saying car loans, but essentially the way this math and the way the numbers work out, it doesn't matter if you're buying a car loan or if this is a personal loan or a student loan. Math is math, and so when it comes to dollar amount of time it takes to pay off, and your interest rate, it's all set in stone. So I just wanted to make that clear to you. Okay, so time length that you take to pay off a loan, very, very important. The last thing not the last thing, but the other point that I want to illustrate is let's rewind the tape and go back to what we were talking about in the beginning and talk about interest rate. Okay, so when I first showed you this loan where the guy wants to take 36 months to pay it off, he's going to, what was it? He's going to pay $1,600.36 in interest. Right, and I said it was really irresponsible for someone to take 72 months to pay off because they're going to be paying more interest in the long run. Well, I also want to just reiterate how important interest rate is and your credit score is, because let's say he does what I say is irresponsible and finances for 72 months, but he's got a really, really good credit score, okay? His monthly payment is $220 and his total interest is $883. That is half of what that person that financed for 36 months at 6.85% paid. So I know I'm kind of restating something that I said earlier, but your interest rate, very, very, very important. Even though that I'm financing for a longer term, because my interest rate is lower, I'm paying less in total interest. So, all the way all this stuff works out together, it's very symbiotic. It all works together. If you finance a very, very expensive car loan, but you pay it off, within 2 years and it's at a really low interest rate, it probably won't cost you that much in interest. And if you finance a really, let's say not a cheap car, but not an expensive car, that $10,000 one, but you finance it for 72 months and at a really bad interest rate, it'll cost you a lot in interest. So play around with this stuff, guys. If you've got a car loan right now and you're trying to find out how long is it going to take me to pay off, what is the total amount of interest I'm going to pay, use this stuff. It's all super easy to use. If you want to buy a car here soon, I would definitely encourage you to start looking at this stuff. Find out what can I afford? How much am I comfortable paying each month? What interest am I comfortable paying? So all this stuff is out there. It's online. It's free. Like I said, use this website. It's thecalculatorsite.com, and I just picked this one because the interface was really, really easy to use. But that's what I want to talk about in this video. I'll have another one where I talk about this second half that they have here that's called the loan payoff calculator, and I'm going to kind of talk about that when in regards to like credit cards and stuff like that, because it's also very, very important that you understand how to use those responsibly. But that's it for today, guys. I hope you learned something. As always, comment. If you have anything else to add to the conversation, please let me know. But thank you and have a good day. Hey guys, thanks again for watching this video. I hope you learned something new from it and you were able to strengthen your financial position. I'm going to keep coming out with more videos, so please stay tuned. But go ahead and like, subscribe, comment, and have a good day.